U.S. President Donald Trump has spent much of his presidency attempting to decouple the U.S. economy with the Chinese one and walk away from globalization. Some experts are saying the ongoing COVID-19 pandemic further increases the risk of deglobalization and withdrawal of foreign investment in China, yet others say such assumptions are misguided, overlooking facts on the ground. So has decoupling really happened? And will Trump's approach roll over into Biden's term? Joining me for the discussion from Hong Kong is Edward Sear, founder and CEO of Feng Advisory Company, and via Skype from Philadelphia, Blackburn-Dwyer, president of Grasshopper Strategies. Gentlemen, welcome to the show. Edward, let me go to you first. You recently wrote an article saying desanitization and deglobalization never happened. Tell us, on what basis did you make that assessment?
Well, the rhetoric of that, happened really mostly during the peak of the pandemic in China. That was in first quarter of this year. I think since then, China has largely contained the pandemic, and the economy has been recovering. And we have seen data coming from China showing very promising growth. In particular, in last month, in November's trade data, the external trade from China to the U.S. Has broken records. And so I think also along the way, we have also seen how foreign companies has been operating in China. Many of my clients who are foreign companies actually has been doubling down their investments in China along this period, as well as supply chains are not leaving China. So I've come to that conclusion that none of this phenomenon that people talk about during Q1 of this year really had happened.
Brandon, what is your opinion about this assessment? Do you agree with that?
The reality is the decoupling did not happen. I have to agree with that. Where I would disagree, though, is I think maybe in the cause. Q1, it's cliche to say, but it was a completely different world. In Q1, we were still mostly discussing the impact of the trade war. We were discussing tumultuous 2019 and the escalating tariffs back and forth. We were discussing whether we could have any dialogues between the U.S. and China. And then the pandemic hit. And the pandemic shut down China first. And then that depressed goods coming out of China substantially. It depressed it really through July, while China still was mostly buying kind of about the same what it was buying from the U.S. during that period of time. Then you had the United States shut down. And then you had the United States shut down through the summer. And you had a lot of people talking about what were they buying and where were they buying it from. But then you have consumers roaring back. You have what consumers found was all the money they didn't spend on travel, all the money they weren't spending going out for dinner, all the money they weren't spending on sort of those types of luxury items, they were now converting into purchases for their families, for their homes, for furniture, for new lighting, for new refrigerators, for things that are largely still made in China. And that has caused a huge, huge increase in the amount of goods being purchased out of China in the last few years, because companies were unable or uninterested in moving their supply chains out of China. Now, some of that was political, some of that was people betting that the Trump administration would be voted out, but other parts of it were simply logistical. It's almost impossible to change your supply lines while the entire world is shut down. If you want to move your factory to your country, you want to go to that country to see it.
All right, I see your point, Brandon. Edward, what is your reaction? Basically, Brandon was saying that when the pandemic hit, it just kind of disrupted the trend, if at all, of any actions or any plans to move businesses out of China, and people have so much time in their hand that they ended up buying. Edward, your opinion?
I think there's some of that. But I think there's also some deeper reasons why supply chains are not leaving China. China has been building up this capability on supply chain, in particular in more sophisticated manufacturing. What I mean is, manufacturing of products that required pretty sophisticated clustering of suppliers within a reasonable distance, where the key manufacturers need to be extremely capable in managing this vast network of suppliers in almost a just-in-time basis, so they can deliver very sophisticated end products to the customers either within China or outside of China. That is a core capability of the Chinese manufacturing that, for now at least, is very difficult for some other countries to replicate that in a wholesale manner in a short period of time. So, while some of this is a temporary phenomenon, some of this is also a very deep-rooted phenomenon which talks to the strength of China's capabilities, as well as, of course, the size of the China market itself is significant, which therefore, become a very attractive place for a lot of companies to do business.
Right. Can I ask a hypothetical question then? If the pandemic never struck, okay, Edward, do you think there would have been a budding trend of deglobalization, decoupling with China or not?
I think, we have to remember that before the pandemic struck, there has been sort of the tension between the U.S. and China for wrong reasons. And in fact, there has been a lot of, in a way, political maneuvering about the notion of decoupling or encouraging American companies to leave China, or for the matter, Japanese governments encouraging Japanese companies to also move away from China.
Right.
I think those are all pretty politically motivated that went before the pandemic happened. So I would say that those rhetorics will happen and has happened actually, but the pandemic actually accelerated that.
Brendan, help us understand an apparent dichotomy that we're seeing. Look, the United States imposed very strict restrictions on Chinese tech companies. For instance, Huawei, ZTE, we all know that. On the other hand, the two countries are actually becoming closer in other areas, such as financial markets, right? The capital of Chinese companies listed on the New York Stock Exchange and NASDAQ has doubled from last year. Why the apparent dichotomy?
I think the dichotomy is more about the fact that the Trump administration didn't understand the markets. And by that, I mean that they kind of understood how to target China's tech economy, but they really didn't come around to targeting the influx of capital into U.S. markets until really the last 2 or 3 months. It was 2.5 months ago that the Trump administration, out of nowhere, announced potential restrictions on capital investments by Chinese companies in the U.S. markets. And that announcement, we were actually on the show talking about it, was then followed up with a resounding silence. And really the Trump administration kind of forgot that they even made that announcement, and they said, oh, well, it'll come into effect somewhere in December or maybe in January or maybe in 2023, which is highly unlikely to ever be a reality now that we're looking at the Biden administration taking over in 2021. So I think that the dichotomy is really about those within the Trump administration, those within the U.S. government that are anti-China, not having come to grips with that change in our capital markets, less so than there really being a preference to allow Chinese capital and not, while attacking Chinese tech companies. The same people that want to attack the Chinese tech companies want to attack the Chinese capital.
Edward, I want to get your reaction on the same question, or your explanation. And on the other hand, meanwhile, we're seeing the kind of restrictions placed on Chinese tech companies. In that sense, hasn't the decoupling actually happened?
Well, to some extent, decoupling has happened because of the restrictions, but underlying, our society, the role of the technology is omnipresent. It goes around the world, really regardless of national borders. So to totally decouple, even from the technology standpoint, decouple China from the rest of the world, in particular the West, is almost impossible. So isolated decoupling, yes, but not wholesale decoupling. On your question about the financial markets, you're right. The data have shown that actually a large number of Chinese companies have going to the U.S. capital market to raise funds, simply because the U.S. capital market is still the largest in the world. It has a lot of liquidity. There's a lot of institutional investors, investing in the various type of company. It is a good place to source capital. And as we also know that capital actually also doesn't quite care about national borders. They go for where profit is. And to be very upfront, China has generated a large number of very promising companies from the standpoint of their upward performance. And so from the U.S. investor standpoint, actually investing in the good Chinese companies is also a pretty good bet. In fact, even before the companies go into the capital market to go IPO, pre-IPO, a lot of the so-called venture capital funds or PE funds who are invested into Chinese companies are actually originally from the U.S. So there's a lot of U.S. capitals in the Chinese companies already, and of course Chinese capital in some U.S. tech companies. So the decoupling from the financial standpoint also is almost impossible.
Well, looking ahead, the fact that, or your opinion that decoupling did not happen as a mainstream trend, what is the spell for the future? What are the one big factor that companies have to look out for now that you say, decoupling really didn't happen, but is that all rosy? Is that all good news for, for business, for investors?
For me, right?
Yes, Edward, please. And keep it short, please.
Yeah, I'll keep it short. I think we're actually entering into a new era of globalization, which is synonymous with what the Chinese government is now talking about, dual circulation, from the standpoint of a domestic circulation, as well as an external circulation. What that means is actually that I think we are now getting in the world where China and Asia in particular, as RCEP is going to be coming into place, will play a very significant role in becoming a circle of supply and demand, whereas Asia, including China, will also continue to trade and do business with the rest of the world. I think that's the new world that we're getting into post-pandemic.
All right. Brandon, do you think that there's a good reason to believe the talk of decoupling since a couple of years should finally, be considered as real noise?
I mean, it's a myth. Some people will continue to talk about it. Some people will continue to believe it could potentially be real, but the reality is we are a globalized economy that is interconnected, and that's not going to change minus a massive, massive, massive shift that I think is unrealistic. China will continue to look more to its domestic consumers. The United States will look to diversify supply chains, and both economies will find ways to succeed both together and in competition.
Yeah, I think that's the wish of the multinational companies in China as well, both from the UK and from the United States. The matter of fact is, what kind of policy will be in place in the United States under Biden to make sure that the people, the middle class, instead of shrinking, will expand, right, under globalization 2.0. I have to leave it there. Many thanks to Edward Xie and Brendan Blackburn-Dwyer. With that, we come to the end of this edition of The Point with me, Liu Xin. Follow me on Facebook and Twitter using the handle Liu Xin in Beijing, and go to YouTube and look for CGTN The Point. Thanks for watching. You've got The Point.